Hey everyone, welcome to your carrier update presented by Powerfleet. I'm Zach Strickland. Mike Vincent.
Hey, what's going on, man?
Yeah, so good to see you. So we've got the tender rejection index for all three of the major modes here. Reefer, van, and flatbed tender rejection rates for the United States in aggregate. I've just got a month here, and you can see how uninteresting that is. It's literally a straight line almost. There's not a lot of activity going on. It's just
everything's cool.
Basically straight line. But this reefer one is the one that we're going to be paying attention to today, mainly because everything else, is kind of trending downward a little bit. Flatbed has had a moment of comeback, and that is starting to pull back down again. Not tremendously so, but reefer has got a little bit of notch in it here at the end. Kind of bounced back up slightly, not a huge reversal.
It just went into the 30s and then came back,
and then came right back out. So we're still up above 40%, still a tremendously tight market itself. If we go to our next chart, let's see what's happening with demand OTVI. We've got our OTVI. You can see here, overall tender rejections, if you combined all those three, you see a tender rejection rate drop.
And that's the green line.
That's the green line right
there.
Okay,
so 24.07 over all modes, all three.
All three modes combined. We did have a little bit of a drop, but if you look at the tender volume index, we've got an uptick in volume.
Got a nice uptick in volume there. Right?
So this is where we can say that supply is actually kind of being in the right spot. Demand is not dropping, so it doesn't support a long-term trend reversal for capacity to loosen. So as demand remains elevated or even higher, which is the tender volume index, that's a measure of demand, it's going to continue to maintain pressure on capacity.
Especially now, right? I mean, you would think it would still do that. You've got truck orders up, but delivery of those trucks is not happening because of manufacturing, right? And drivers are certainly not just, there's not people entering the workforce like crazy right now.
They're still working out
so
there.
Capacity is still tough supply.
Exactly. We have not had a large increase in capacity supply at all. This is just an indication that for now it looks like overall people are in a better position than they were a week ago.
They're playing nice together. Things are fairly smooth.
Exactly. So if we go to our map here, I've pulled up the reefer rejection rate weekly change here in the map. So anything in the blues, that's going to be a weekly increase in reefer rejection rates. And again, I've got our market share underneath it to show you just the depth of those markets in terms of how much demand is centered in each of those markets. The largest markets are the tallest ones. And then the darker blues are going to be the ones with the strongest increase in reefer rejection rates. You can see the southeast over here got a lot of blue in it.
And this is the weekly change.
Weekly change. So we've had the most change in the reefer rejection rates in the southeast this week. You can see out there in Los Angeles, there's not a blue there, but
San Diego is lit, but LA,
But you can see the southeast and Dallas and up here around the Midwest, we've got these pockets of reefer rejection rates starting to increase a little bit more. We've had produce season in Florida, Mother's Day, always a big moment down there. The southeast still continues to be one of the tighter spots in the United States, especially for reefer. And this has been the focal point for van as well. So van capacity in the southeast has been a hot spot. And again, the Colonial Pipeline, everybody's been asking, is that going to have some sort of significant impact to trucking capacity if you miss a day of activity because you're driving to go find fuel? But again, I don't think the truckers are necessarily panic buying in the way that the rest of the population is.
They're not. I did speak to an owner of a trucking company on Monday, and already Monday they were having trouble getting diesel in a couple of places. But I don't know that it got that crazy because I've been watching it too. The O-Tri, the up on tender rejection, up and down the coast Atlantic, and I haven't seen anything that I would say, ooh, that's diesel.
Right. No. And again, it won't take a lot, though, if this does kind of trickle down. It may take a week or so before we do see any real natural impact from that. But
absolutely.
It doesn't bode well that the Southeast is already kind of poised, having capacity issues, and that's where the focal point of all this is.
And that's really the point we've been talking about through the winter, now into the spring, and eventually into the summer going on, is things are fairly smooth, like you showed on the graph, right? But it's still 1 in 4 being rejected.
And it doesn't take a lot.
40% of the reefers. So one little piece of energy in there, boom, you've got chaos.
If we go to our next chart, we're going to see this is our truck stop 7-day reefer rate per mile. You can see spot rates pretty much in almost all the top 100 lanes for truck stop in the green, indicating that all these spot rates are increasing. So the reefer market's white hot right now, especially on the spot market. So if you look around, you can see Atlanta is showing up there quite a bit, and a lot of those spots. Chicago, Chicago showing up, and even in Los Angeles, again, we're not seeing a huge amount of increase in reefer rejection rates everywhere, but in a lot of these larger markets, reefer capacity is extremely tight. Spot rates, look at this, $4.46 a mile from Atlanta to Louisville. We've got Los Angeles to Salt Lake City, $4.61 a mile. These are ridiculously high rates.
Yeah, and Elk Ridge to Hartford is always that. Right. It's like you're buying gold bullion.
Yeah, going back into the Northeast. Yeah, you might about one of the worst lanes you could go in is going into the Northeast on a reefer truck.
Yeah, you don't want to do it.
Yeah, so we go into our next chart to show that the reefer rejection rates for some of our largest markets in the United States, Los Angeles, Atlanta, and Dallas, you can see here at the very end, every single one of them showing a market increase in the tender rejection rate. So, we've had kind of this spike around the end of the month of April, and then it starts to settle and then comes right back up again. So if you are a reefer carrier in any of these larger markets, these are going to be the areas that you're going to see, contracted freight volumes being rejected more. The spot rates are going to be higher. It's still an incredibly volatile space.
Yeah, they're rising fairly fast over there, are they not?
Yes, this is even when the rejection rates come down, it's probably not for long. This pattern shows me that
you can see it in that pattern. It's like everybody gets to the right place and then they're full and gone.
Yeah,
right?
and
that's kind of what's happening.
Exactly. Yeah? And if you compare this to the trend that we were seeing before the winter weather event, it's much more settled. That looks a lot nicer, a lot smoother trend line. This, you can't count on anything right now.
No, it seems like you can't, except for more chaos.
Yeah, exactly. Right? And we're about to enter the warmest part of the year. So.
And we're going into a much worse place, are we? Yeah. Well, potentially a much worse place going into the summer.
And then you run out of gas and you got nowhere to go.
And then you run out of gas and you got nowhere to go, and a late winter. So, anyways, thank you so much for that update.